So welcome everyone. Welcome to Tradefox second webinar. We have a series of 7 webinars that we're hosting. This will be the last one for 2024. Today we're going to talk about unlocking international opportunities, growing your buyer base in new and existing markets. So this session is designed to offer practical tips, proven strategies, and valuable experience to help companies expand into new markets and to grow internationally. I'm really excited today to introduce our panel of experts. We have 2 very special people with us today. Aryant Singhi, who is the head of Ferris now at Gemini Corporation. He brings over 15 years experience in the recycling industry. Aryant specializes in metals, minerals, plastics, tire recycling, and is committed to advancing sustainability in the circular economy. He works closely with partners and shipping lines and internal teams to promote sustainable practices within the industry. Also with us today, Abhijay Goenka he's from Steelbro, he's Vice President at Steelbro now. He's been leading the expansion efforts there since 2015. He oversees trading, export management, and strategic partnerships. He's also co-chairing ARIMA's Young Executive Council, and at the same time, serving on the Young Traders Committee at BIR. Abhijay will share his insights into navigating the complex export challenges and driving growth in new markets. Welcome, guys.
Hey, Chris, thanks for the introduction. You made me feel a bit old, honestly. I'm still not so old, 15 years experience, but yeah, it's an exciting industry to be in. It's an industry everybody wants to be in. Earlier, probably 10 years back, 15 years back, everyone would probably say this is an industry for people who are 50, 55. Scrap is boring, scrap is dirty. It's not anymore. Young people wants to join us. It's exciting. People from every sphere of life, every sphere of management, be it finance, logistics, IT, as a buzzword, everyone wants to join in. So yeah, very exciting times for the scrap industry, metal recycling industry. I think it's an honor to be in this industry, and I'm happy that I can do something for the world as well as for my family, so that the children that they grow up, they know that we've contributed to the industry and to the world as well.
Outstanding, Aryant. Thank you very much.
Yeah, and I appreciate you having me on, Chris. Just really saying all the same thoughts as Aryant. I mean, this is an industry, growing up in a family business when I didn't understand it, same thoughts. You know, this is a really niche business. It's kind of a dirty business, but then once you start learning and you understand, one, not only how important it is to the world and to sustainability and to the green movement, but also how incredible it is, the opportunity to work in a truly global industry, get to travel, meet a lot of people, and again, to what Aryant said, working across finance, working across green sustainability initiatives, and what that means for regulations, seeing how macroeconomic effects and regulatory environments are changing and impact the business. It's such a well-rounded industry that it's something that I wish I had grown a passion for much earlier in life, but I'm happy I did when I did.
Amazing, amazing. Thank you so much, Abhijay. Today, our speakers bring a wealth of experience, and I want to let everybody know, just everyone joining us now, we're going to be talking about 5 different topics today. We're going to try to cover those and within a 60-minute time frame, actually a little bit shorter. We're going to leave time for question and answer. So please, along the way, feel free to put your questions in the chat. We'll just set those to the side, and as we start wrapping up after our 5th segment, I'll go through the Q&A. We'll try to get to as many questions as we can within the time that we have, and of course, anything that leaves any question leaves unanswered, we'll also try to follow back up with everyone. So please put your comments in, and put your questions in the comments to the side of the Zoom call. So today we're going to talk about 5 different segments, 5 different topics. First one is going to be identifying the best markets for expansion. So if you want to expand your business and you're looking for a new market, well, you got to do your homework first, and we're going to talk about that. Secondly, once you're working in getting into this new market or even expanding an existing market, the question is, how do you build really strong relationships with international buyers? And the guy's going to share some ideas and thoughts around that topic. We also are going to talk about organizing shipping for export. Just in general, want to delve into a few tips and tricks of the trade. Shipping is can be a very complicated part of the business. There's a lot of work that goes in there, and I would love to hear these guys' thoughts on that topic as well. We're going to be talking about digital tools to make your work easier. So nowadays, the world is awash with technology solutions coming from all directions. That's what we do. Also, part of what we do at Tradefox is provide tech solutions for industry, but we've got all kinds of interesting offerings nowadays. We're going to talk about those a little bit. Finally, we're going to talk about the best practices for vetting these new partners. When you're working with new business partners, there are some good tips on how to engage those guys and how to just do your checks before you get involved. So those are the topics that we're going to be talking about today. So let's just get things started and start off with identifying the best markets for expansion. So maybe Ariane, I'll let you jump in and take the lead, and Abhijay, just please jump in at any point. But I would love to hear your thoughts. How in the world do you actually identify which markets you're going to start? I mean, how the world is, there's a lot of countries that are importing, things are changing all the time. I'd love to have your thoughts on how you even get started with that.
Okay, some numbers. The global scrap recycling market in 2024 is estimated to be about $475 billion. This is according to Forbes. It's estimated to grow at about 6% CAGR, and we expect to hit $1 trillion by 2044, if I'm not wrong. Wow. So by 2024, the global scrap metal recycling market would be $1 trillion. So you can see the expansion scope. It's about 6% CAGR. So everyone has an opportunity to come in. Now, the way we identify and look at expansion of the business is very simple. Like when we were in school, we do your homework, right? Doing your homework, how does it mean? So first of all, you analyze import data, right? See the movement of the cargo. You can go to Statistica. There's one website. You can go to World Bank. There's another website who can tell you in metal market, from destination A to destination B, this particular commodity is moving, right? If you have a research team, or you don't need research team these days, Google is your best friend. You can just go in, log in, and see what's moving where. It's very easy. Second thing that I personally feel is you keep your eyes and ears very, very open and very sharp. Keep them clean and keep them very, very sharp. Hearing word of mouth, if you're attending conferences, you'll get a lot of cues from suppliers or customers as to what's happening in the world, where it is moving. I'll give an example. So December 2023, we've shipped cargo from Europe on Maersk, and on the 18th of December, we hear, okay, there's a Red Sea attack, right? Maersk comes to you and says, right, you got to pay a $500 emergency surcharge to cover for the rerouting of the cargoes. Next 3 months, what do you do? Because you can't move the cargo from here, or if you move the cargo in scrap metal, you got to pay $20 a ton, which is not even your margin. So we go back, analyze the data, do our homework, and try and connect the dots. You cannot connect the dots looking forward. You can connect the dots looking backward. So we've done some shipments in the past from Hong Kong to India. The transit time is 5 days. We chose not to do that business because all the business that Gemini is doing on LC. And to make the shipment, do the shipment and process the LC and send the documents in 7 days, it becomes complicated, right? As traders, what do? You're always hungry. I get on the plane and go to Hong Kong and start talking to the suppliers and say, okay, this is our proposal. This is what we want to do. And I come back a week later with 5,000 tons of scrap, moving from Hong Kong to Bangladesh, Hong Kong to south of India, Hong Kong to west of India. There we use our core competency, which is logistics, try to make sure that we are minimizing the logistics cost, using the shorter transit, and doing the homework at the back end to make sure that the trade finance team actually execute the shipment in 5 days that we couldn't do in the past. So we connected the dots that because we had done it in the past, we had a bad experience. How do we improve it? By working and by trying to find where the loopholes were. And today we are doing about 200 containers from Hong Kong every month from March onwards. So we diversify that risk from Europe. We opened a channel from Far East to Bangladesh, Far East to India, that we had done, let's say, 10 years back. So I always say, do your homework, connect the dots. When you look backwards at your home or in your office, you'll find a lot of cues on where to do the scrap movement from if you're stuck.
Yeah, so I'd piggyback on that. What Arihant talked incredibly about is identifying new markets and identifying opportunities. I'll take a slightly different lens on it of how to consider whether that market is how to judge the risks of dealing in those markets or in dealing in those trades. One thing we consider a lot is if we're looking at a new market, what happens if things go wrong? So, for example, if we have one consumer in a part of the world that is offering a price and we can make it work, if somehow it doesn't work out well, what can we do? So, for example, in India, where one of our stronger markets, we have our own infrastructure. If somehow there's something going wrong with the consumer, we can move it to our own plants. We can send our team over there to double check the material. We can potentially process ourselves, or we know, I don't know, I'm just making up a number, 30, 10, 5 other consumers that could possibly take the material and it may work out better for them. So that infrastructure, that ecosystem we have there is very strong, which allows us to deal with issues. That's not true for every single market. So if we're dealing with a completely brand new market where we only have one consumer and something goes wrong, it becomes a lot harder to deal with that issue. And that factors very, very critically into our risk reward ratio there, where if it's very profitable or we think there's a potential to make it profitable as we go forward, we can risk it. But if it's a one-off trade, even if it's a new consumer, new market, all that, if it's a one-off trade that we think there's a high chance something can go wrong, and then we're completely at the mercy of the buyer because we can't send someone, we can't move it somewhere else, we may back off of it.
Are you looking for then, I mean, so just backing up to selecting that new market, obviously going into a new market, having one buyer, can be a bit of a precarious situation because as you just said, things can go wrong. And then where do you send it next, right? You've already got it shipped to Malaysia or wherever, but then how do you actually come upon the idea to ship into any new market, whichever, like think Malaysia or whichever market that was where you had the one customer that you were starting in? Did you just look for some market research, or were you getting kind of words from other people that are shipping into certain markets? Where did that original idea come from to even take the chance on a new market?
Okay, so to answer your question, we analyze the import data because we have a compliance team and a research team who analyzes the import data and finds out multiple locations to that particular product, right? And any business that Gemini is doing is strictly on LC. So I will not load or I will not put anything into the container and let it go a ship on sea without me having the guarantee from the customer in the form of an LC. And with our history of 35 years, we don't sell to traders. We sell directly to the end users because we pick up their finished product and bring it to, let's say, Europe, where we resell it, or we bring it to China. For example, I'll give an example. We pick up ferrous from Hong Kong. We sell it to south of India. They make steel billets, which we buy from them, and then we export it to China. I'll give you a simple example of non-ferrous. We have a recycling plant in India and Gujarat. So when we're shipping from Hong Kong, for example, or let's say from Singapore to the west of India, we keep as a backup that 50% of the material we will recycle in our own recycling plant in Gujarat. We make a product which is ADC 12 and 50% we are trading it. So none of the business that we do is just hop, skip and jump. There's a proper thought process to it. First research, then the due diligence and the compliance, then the commercial part, and then the execution part. And so there's a lot that goes behind it.
Very good. And Abjay, a question directed to you here, because as you said, Ariat, you guys only deal with letters of credit. Is that also the same for Steelbro, Ariat, or are you also working cash basis as well?
Yeah, so actually it's quite the opposite. For a lot of what we do, we're shipping one container at a time on an order. So it's an LC is the cost is almost prohibitive.
Right.
We might do it if it's a new consumer and we want that guarantee. To help build that trust early on, and we'll kind of eat those costs. But for the most part, very, very few of our deals are on an LC.
Okay.
But yeah, and then going back to your previous question. So I know Ariant talked a lot about having the research team and looking at the import trade data. But even he mentioned something earlier that I just want to expand on, just keeping your ear to the ground. There are a lot of publications and literature and journals right now in the space. It gets hard to make the time to make sure you're reading everything. But oftentimes, if you are proactive about reading it, whether it be like Argus, whether it be the Davis Index and some of the publications and information they provide, it gives you a lot of insight into how scrap flows might be changing. And sometimes, everyone would like to be the first one to be moving to the new market that's only offering prices, but there's no harm being the second or third person. And if those periodicals mention that we've seen an uptick in scrap going into Indonesia, or I'm just making an example. That's a first hint. And then hitting the ground, going to those conventions, trying to talk to people, leveraging the trade associations and the membership, and constantly having those conversations with those relationships. Even if you're not doing material regularly in those countries, if you have those relationships and now you get ticked off that maybe material is starting to flow there, now you can leverage those relationships to call them and try to understand what's happening. And of course, all of that in conjunction with the data that Arihant is mentioning, using the import data, using all of the world trade data, that the combination of the two is very powerful.
Okay. Well, very good. So once you're so this is the way that you choose a market. And of course, there are some there's data. There are trade shows. They're basically looking at the conferences, for example, in different areas, try to make these connections. But now you've got to build the relationship, right? So that leads into the second segment here. How do you go about building trust with these new buyers? Because you're starting from scratch, right? These are brand new relationships. Arya, could you maybe start us off there?
Yeah, I think the first and the foremost point is you have to foster an emotional connect. I mean, in the scrap industry, it's a service you're selling to me. Even if you're a metal recycler, or if you're an end user, or if you're a trader, the foremost important thing is you have to foster an emotional connect with your customer or with your supplier. Share a meal, share a drink, talk about things apart from just the boring stuff. Because I think 15 years, if someone were to approach me and say, okay, I want to buy something from you, and he keeps talking about it, in my experience, in 15 minutes, I'll be bored, right? However, if he talks to me about, let's say, what's happening on Premier League, or what's happening on Champions League, or he can tell me what's Donald Trump doing, I would be more interested to listen to it. And at the end of the conversation, if he takes 30 seconds of mine and says, I want to buy 1,000 tons from you, I will sell it to him. So for me, personally, in the 16 years, what I've learned is you have to foster an emotional connect with your buyer, with your supplier, to an extent where even before your customer says that, I need this, you know what he needs from you. So that is what you have to do. And the second thing, what I always feel is build a trust. There's nothing more than important than just building a trust with your suppliers, with your customers, and give them consistency, right? This year, of all the years after 2008, after 2015, has been an extraordinary year with lots of ups and downs, primarily downs. But if you're consistent, if you're transparent, you'll survive in the industry, and you'll more than happily survive. So for me, foster an emotional connect, trust, and occasionally have a customer feedback. Because Bill Gates has rightly put it that the greatest learning you would get is from a disappointed customer, not from a happy customer. You will learn a lot from a disappointed customer rather than a happy customer. Happy customer will tell you so many good things about you. But a customer who's disappointed, he will teach you so many things. That's what I want to put it at.
100%. I would totally agree with you. I think that's super important. We'd love to hear compliments, and it's so easy to give those compliments when in business. And it's actually hard to be critical of people in business, right? It's easier to take the short path and say, hey, everything's good. But when you get that critical feedback, now you're learning something. And I agree with you completely. Jay, what about you? What's your take on building trust in these new markets? How do you guys approach that, or how do you approach it specifically?
Yeah, I mean, having those conversations are critical. Obviously, the ability to go visit someone's plant, spend some time with them, have that meal, that's critical in creating trust. I would almost say that's ideal, though. Sometimes the challenge is when you can't do that. How do you build that trust? That's where things get a little difficult. And I think just being conscientious about how you have those conversations and what kind of questions you ask go a long way. Understanding what the consumer or your buyer is trying to do with the material. What are they producing? What are the pain points they have? Who are they currently working with, and what issues have they run into before that, hey, if I'm a good partner to you, I can make sure that doesn't happen again. A lot of those conversations and sharing those stories, both to the positive and to the negative, really help build a relationship, but also is very insightful. And the other quick thing I would mention is having those two-way conversations. Sometimes it's really easy to do business when the pricing is working. The challenge is keeping those relationships going when there's a lapse in doing business. If I'm not doing business, if I haven't sold you a load in a year, that doesn't mean I want to lose that relationship. I still value that relationship. I want to keep that going. I want to keep the communication going. It's just the business may not be happening right now. And again, that's where, as a trader or as even a seller, making sure to keep regular touch points with certain consumers that you want to establish that relationship with, that's important. So you're not calling them only when you have material or you're giving them a firm offer, for example, but when you're calling them just to get an update on the market, see what they're seeing, see how active they've been. That's also great in terms of learning, right? They may be doing something that you're not aware of. So keeping those regular touch points, and then say you are trying to sell material and the pricing doesn't work. A lot of people that sell material says, hey, I can't get on the phone and tell 10 different people what the price idea is, that this is what the price goes for. I totally understand it. But from time to time, you can't expect someone to just continuously coach you and you give them nothing in return. Even if it's just feedback, that's good enough. If you give them feedback, if you give them information, if you give them some market insight, they've learned, and that's good enough. And that will help the relationship keep going.
You guys spend, I mean, I know we all do spend quite a bit of time, in country, basically meeting with our customers or suppliers. And I used to be a trader as well for a number of years. How much of that is involved here? And when do you actually maybe spend more time or invest more time in the personal connection, going to the factories or going to the yards? And how does that look, Jay?
I think that's a critical part of the business. The challenge is it's always trying to find the balance. Not everyone has a very large team. Not everyone's a dedicated trader, so they're balancing trying to buy and sell with running their business with other growth projects. But I think, in-person time is the most critical aspect of building that relationship and trust. Obviously, more important in the earlier stages. If I've been doing business with you for 20 years and I don't visit you for a year, it's probably not that big of a deal. But especially when you're starting, and this is true on the buy side and the sell side, there's a lot of people in the industry at this point, right? There are a lot of people that do what I do. There are a lot of people that generate scrap. There are a lot of people that buy scrap. But getting that face time, sitting down, and again, understanding what they're doing, and the best way to understand that is actually seeing them do it. It's the best way to build that relationship. So building in those touch points, making sure you are traveling, you are in front of them. I think it's critical.
Very good. Well, let's turn the topic to shipping now, because it's such an important part of our business, right? And there are some tips and tricks here of how to do a great job at that. It's obviously there's, price is everything. The cost of shipping, it can make or break a deal. So obviously, maybe you guys have some tips to share around the usage of freight forwarders. Maybe, when is it that you perhaps use steamship lines directly? How does that look for you guys? Abhijay, if I could just start with you on that, maybe just give us a little bit of insights from Steelbro, what that looks like, and maybe share any tips and ideas you have with the audience.
Yeah, on the supplier side, price is definitely the most important thing, but freight and logistics is not that far behind it. And that often is what may differentiate trader A from trader B, is the logistics. And that I actually think is a little bit more in control of the company versus the pricing. The pricing is a little bit more market driven. Your service and your logistics is more self-driven. So what Steelbro does in specific, we do a combination where we work directly with shipping lines, and then we do work with freight forwarders. And we find that combination to be very helpful. Speaking from our perspective, having a direct contract with the shipping line, the benefit there is that you also have a direct relationship with the shipping line. So when there are issues, when you do need to get into the ear of somebody that's working at the shipping line, saying that, hey, I'm a direct customer of yours and I have a certain volume, does help a lot. On the flip side, freight forwarders, they know what they're doing. This is what they do all day, every day. They're experts in the space. They very much usually are in the ear of the shipping line. They have contacts. So the combination has worked out well for us. Additionally, what we do is we do kind of forecast what our volumes will be on different shipping lanes, and we try to organize bookings accordingly. Obviously, we try to be conservative on it. So that doesn't mean we have every single container that we need for the following month already booked. But being able to look at historical data, run some basic analysis to say that these are the amount of volume we'll need, and being proactive in arranging those bookings, that makes a big difference, particularly for some of your big suppliers. I know that I have some suppliers that I pretty much guarantee them, hey, I can get you 10 loads a week, and I plan for that. and again, that's a partnership. I'm looking for them to then give me 10 loads a week. And I have to make sure my price is there, but if my logistics are there and if I'm doing my job correctly, the price is there, I know that they will have the 10 loads a week to give us. So that level of analysis, looking at the data, doing some sort of forecasting, tiering out your customers to know who values that logistics and who will be able to honor those logistics versus maybe those that their volume's a little bit more sporadic. So maybe not count on that in your analysis. I think that all goes a long way.
And use freight forwarders or to organize at least the local portion of the shipment when you're dealing directly with the steamship lines, or how does that look? Or do you work with yards that will work directly with local haulers?
Yeah, the vast majority of our business, our suppliers do the drayage, the trucking directly to the ramp report. When we have to handle it, and we do offer that to our suppliers, there are certain markets where we do a lot of volume. We have our own yards and our own infrastructure. There we work directly with carriers, but the vast majority will work with our freight forwarders or other shipping partners.
Ariad, how does that look with Gemini?
So we try and break it down. We do about 120,000 containers a year. In that, we use a fair ratio of shipping line on a contractual basis along with freight forwarders. So European market is driven mostly by shipping lines. So our presence in Belgium for 35 years enables us to have contracts with the bigger shipping lines, let's say like Maersk and MSC. In UK, I give you an example, it's mostly forwarder driven because the forwarder has an ear with the shipping line and it works. But if you ask me personally, in logistics, there is so much money to be saved. It's a cost at the end of the day, right? It's an expense. There's so much of money to be saved. I'll give you an example of when I used to do tire scrap export from the UK. So there is a freight, all-in freight, then there is the custom duty, and there is the BL fees. Now, if you do not look at it minutely, you would see per BL, when they're filing the VGM, right, it's about 40 pounds or 50 pounds for argument's sake. If you log on to the website, get someone to do it, you can do it at about 5 pounds per BL. So you save about 45 pounds per BL times the number of BLs we make, which is approximately about 800 BLs a month. You're saving that money. So my strategy too is breaking down the logistics cost. Sometimes forwarders trick you there. I hope there are no forwarders here, but that's the actual fact. The forwarders, they cover it so nicely. They'll say, okay, Manchester to, let's say, Nava Shiva is $1,400. You're like, okay, fine. Someone's giving me $1,425. You're giving me $1,400. If you ask them for a breakdown, you'll see there's a place where you can still save some money. At the end of the day, logistics is a cost.
Yeah.
Second of all, what I think is what everyone should probably try and do is shipper's own containers. So we do a lot of shipper's own containers where we lease the containers for a minimum of 5 years. Then we can choose to move the cargo from, let's say, because we buy from China, we bring it to Europe, and then we can ship it from Europe to India and take it back to China also. So we can choose to take the shipper's own containers wherever we feel like in a period of 5 years and put it on whichever vessel we want to. So for me, shipper's own containers works. I told you about breaking up the freight cost. I think as a trading company or as a recycler, as a supplier of scrap metal, there's a lot of margin or a lot of cost to be saved. And third thing, like we book flight and hotel tickets. I would say to everyone, plan ahead and plan better. The shipping lines are there to get you. It's as simple as that. 10 years back, if you were booking a containers, you cancel it a day before, there was no charges, right? No wasted journey. Maersk Spot, if you book a container now and cancel 72 hours before, you pay about $300 odd, right? Okay. That's not fair enough, right? So for me, okay, that's their policy. I would suggest is you plan ahead and you plan better to make sure that, you don't have these exceptional costs. Even if you have, I would say create a separate budget or a buffer. At the end of the year, you don't have any nasty nightmares that you spend $500,000 on your exceptional cost. Last year, freight alone, Gemini has paid in 2023 about $12 million in freight, right? Wow. Okay. If you save 1% of it, you can do the math yourself. Yeah. That's what I would say.
Okay, very, very, very insightful. So questions, next thing we'll talk about are the digital tools. And I think one thing I find very interesting, of course, we at Tradefox, we provide services around trade reputation reports as our core product, of course, where we basically been working for a number of years to bring in all the information on companies around the world that trade recyclables and to catalog all that information. And we're working to expand that extensively. And that's what we do. We're definitely a tech tool, a data tool. And but of course, I also come from this business. I've been 26 years now. I've been in the waste and recycling industry, so I am not new. And so you know, I know we make years as a trader as well. You know, we make a lot of decisions with our gut because at the end of the day, when you're dealing internationally, there's no international court for us. There's no place to settle our disputes. You know, there's real money loss, and you're talking about controlling cost. I mean, there are ways that you can lose money just by dealing with you know, people that are, you know, bad actors, or just in general communication breaks down, and you lose money, et cetera. So I think that we, you know, need to, and I feel very, very strongly, we need to make more decisions as an industry based on the data. And luckily, we're in a time where there's lots and lots of data coming from all directions. We're doing the best we can to bring stuff together for our one product from different sources: KYB, KYC information, credit report, financial data, customs data, shipping data, and you know, we're bringing it all from these different sources. But there's so many other technical solutions out there. We've talked about a few before this call. So I'd love to hear you guys' thoughts on what are the most valuable digital tools nowadays for managing international buyers, and you know, still in the scope of expanding into new markets.
Yeah, so I'll kick off that one. Honestly, it's an evolving practice for Stillbro, and that's something we're constantly working to see how we can optimize it and do more. But that's we're already doing so much more today than we were doing 5 years ago. So the first thing I'll talk about is using a CRM. That's something that a lot of traders don't actually utilize, particularly if you have a large team. Data is very important, right? We've talked about it a lot. Our help to talk about data in terms of identifying new markets and in terms of logistics. Obviously, Chris is making an incredible platform utilizing trade data and customer feedback. Companies need to start tracking their own data. Who are you talking to? How often are you talking to them? Which person in your company is talking to them? On the buy side, a CRM can then inform, you know, whether it be automated marketing campaigns, generating reports about who's being effective in the trading, who's not being effective, or even if we just simplify it really, really easily to who have we not talked to in a while, right? That's a simple report that a CRM can help generate, and make sure that you're keeping those relationships going. I talked about it earlier that you want to make sure that even the people you're not doing business with, you're staying in touch with. If you're not tracking that data, it's very easy to forget. So that's something we have started using. We're still honestly in the process of trying to figure out how to fully iron it out, but it's one of my main goals is to really get a CRM stood up and leverage to its fullest capabilities. I have to talk about the risk side of things, and that's where Tradefox becomes very important. One thing that Stillbro does is we aren't unable to get insurance on most of our trade partners. Okay. I've mentioned this in the past. I compare our business to a bank, and we're just trying to turn our capital as quickly as possible. So we're looking at transit times, we're looking at dollars invested, we're looking at a return on invested capital. But a big part of that is when you are selling to an overseas buyer and you're financing that trade, you can think of it as a little bit of a loan, right? How much risk is that capital taking on? And we try to do metrics on that. So using data from like Tradefox, using other credit reports, you know, we used to use CreditSafe for quite some time. You can combine multiple data points, which we have done, and then putting a score onto each type of buyer. And then our ERP that we have tracks what is our exposure to each consumer. You know, how many containers do we have in the water that's heading in a direction? How late have they been on previous trades in terms of payment? And then the combination of using our internal credit safety score on a buyer, plus their performance history, plus our exposure to them, we finally are able to generate a report that we look at. Right now, we're looking at it on a monthly basis. I'd like to increase the frequency of it, but to say, hey, how much of our capital that we've deployed is at risk? And do we need to fine tune this a bit? And we have thresholds that we try to stay in between. So I'll kick off with that, and then I'm sure Arihant has got significantly more data tools that he uses.
Interesting. Arihant?
Right. I think Abhijay has touched about the CRM system, ERP. Every standard company, every recycling company has a bit of it. I want to touch about a little bit about AI and the role of AI, which is part of data and how you do it. There's a recycling company in Scandinavia, which I talked about, Chris, earlier when we were having a chat. They have actually installed AI robots to sort metal scrap from steel to copper to aluminum, and they've invested about 1 billion euros on it, right? Where I think it's going to head in by, let's say, in the next 5 to 6 years is every company involved in the metal recycling business would be looking up to data, would be looking up to AI, or would be looking up to digitalization. It cannot be manual anymore. So for us as a trading company, prima facie, what we are trying to do is we're trying to develop an app where the app would prompt me to sell to this particular customer based on the business we have done in the past, based on the reports from Tradefox. So we are trying to link that based on the trust score we have with the customer or a particular supplier. And AI would probably help us to analyze the data of what we have done in the history, which will help us to enable faster decision making, sound decision making in the future. So I am very for it. 15 years back, it was all manual, pen and paper. 15 years down the line, it's moved on to companies like yourself, companies like, for example, I wanted to talk about a little bit about SteelBuy.
Yeah.
SteelBuy is a company based in England. When they launched in 9 months, they recorded 300 plus transactions online and created 1 million in sales revenue in 9 months.
Incredible. Yeah.
Right. Now that company says we are a platform where we cover your trust score, where we secure your payments, where we ensure that you are insured, etc., etc. And we take a little bit of margin, 0.25%, 0.1%, whatever it is, XYZ as a margin. But they make sure that that business is secure. And you know who started this? I'll tell you, ThyssenKrupp. ThyssenKrupp is the second largest company in steelmaking in Europe. Most of you must be aware of it. They actually invested in SteelBuy, and that has recorded 1 million in sales in the last 9 months.
And this is a finished steel. I looked earlier, right?
So they do finish, they do aluminum, they do second choice, which we are involved in. So we buy and sell a lot from that particular company, right? Then you have Tradefox like yourself, the one that we feel that, like your company like yours help us in A, building the trust score, B, you have a partner introduction service, right? So I can use you as my partner to make me get introduced to someone who I don't know, right? So then I know that Chris and Tradefox knows this customer, so I can place trust on you. And for me, trust is very, very important. And then there's a third company, which is like, for example, Scrap Buddy. Most of you knows too. What they do is they're a company. They actually go and verify a person sitting in America, Australia, New Zealand, Europe, wherever. And you can sit in your office and say, okay, trust on them because they verified them. So there are various platforms that has enabled us to make sound decisions. However, there are some nightmares everyone has once in a lifetime, right? You cannot avoid it. But I think in the next 5 to 6 years, the reliance on Chris and Tradefox will become so important that we'll be working as partners rather than thinking of whether it's a transparency issue, whether it's a commitment issue. No, it's not, right? It's taking time for people to understand, but probably in 5 years, they would realize that you are friends rather than enemies. I would leave it at that.
Very good. Yeah, well, at Tradefox, I'll take a moment to give a small plug to a new product. You kind of just mentioned it because we've been speaking with you already about it, Ariant, and you're very well aware of it. But we've launched a new product about 2 months ago. It's called PartnerLink, and it's available exclusively for companies with a specific standard. We have to have companies with a certain number of trades, certain number of reviews, certain number of trading partners reviewed, et cetera. So we have to go with companies that are very well vetted and that we see an enormous amounts of data. So we're very comfortable recommending that company to trading partners. And, the idea came about because, we provide data for due diligence and, we are essentially trying to help companies stay out of harm's way and make wise decisions when they're trading. And also it's about, Tradefox about bringing accountability as well, right? We have the capital recovery department where we try to help companies recover money that they've lost because people still losing money in transactions. But over and over and over, we were being asked, can you help us, make these new business connections? We're looking for new partners in this market, and we just weren't configured really as a tech solution that way yet. But now we are. So now we're working now essentially with our rich data sets and helping companies to find new trading partners. So just a little plug there for Tradefox PartnerLink. If people are interested in expanding their market, it is a service that we provide. So you can just reach out to us on that. So, all right. Yeah, thank you. That's very, and by the way, I only see a few questions in the chat. We have just one more topic that we're going to cover. So please, anybody has any questions, pop them over in the chat, and because we will get around to them in just a couple of minutes. Let's see, what is our last topic here? We want to talk about, well, the best practices for vetting new trading partners, actually. So this is, we've gotten out to the point we've built up, we've made decisions which markets we're going to go after. We've talked about building those relationships with our new buyers in these new markets. Talked about shipping tactics as well, relationships, etc., digital tools. And now we're talking about the last topic here, which is how do you actually make sure that you are dealing with a company that's going to become a good trading partner. And Arjan, if I can let you just start off, it's more than data tools, it's that too, but let's hear from you. What do you guys do to vet your new trading partners?
So after you break the ice, your research and your due diligence, etc. After you break the ice, you probably first of all would want to go and meet that person, see the facility, be it a buyer or a customer, understand what they do, right? And then take a call whether, this person or this particular company is suitable to us to work with, whether their ethos matches with our principles, and be absolutely transparent about it. As a company, Gemini is using a lot of credit referencing. So the likes of Dun& Bradstreet, you've got Cofars, you've got CreditSafe. So mostly when you're in Europe, you are actually blessed that somehow people are linked with some sort of an insurer. But if you move to, let's say, any third world country, you need to be a little bit cautious. So I prefer to be there in person, do a judgment call after meeting the person, spread the word of mouth, try and get some details, probably check a few transactions if they've done in the past, maybe share us the copy of the BL, and stick to secure payment terms. Like even if that person has got, let's say, 5,000 tons of scrap metal, do a small transaction, check the service of theirs, check whether they are happy with us and we are happy with them, and then slowly progress a relationship. So we do a lot of vetting in the sense, like, first of all, we do our homework. We make sure that, if the person is registered with any of these insurance companies. If they are not, then you go and meet them in person. When you see a site, you probably will understand, okay, how much is it doing, how much is it not doing, then take a judgment call, and then move on to the commercial part. But stick to your own terms, don't change your ethos in order to secure new business or, let's say, additional business to meet your targets. I keep it very conventional in this and try and get a few more information and try and get the online and offline information, combine it and make a sound decision.
Okay. Very good. Abhijay, let's hear from you. What are your thoughts on vetting new trading partners?
Yeah, so it's a similar process. Really trying to understand how active they are in the marketplace is quite important. So now that might be on the talking to competitors or other people in the industry and saying what their experience has been with this company, because you're not always just trying to vet, will they run away with our money or will they run away from the contract? Luckily, in today's day and age, that happens, of course. Everyone has those bad experiences, but I would say that's actually not the number one risk. Right. The bigger risk is somehow this trade goes through and there's an issue, and then solving that issue becomes a nightmare. And everyone's process for solving an issue is different. So my number one thing when I'm trying to deal with someone is to determine how do they deal with those issues. And the best part is the best way to do it, in my opinion, is to talk to them about issues they faced, or find someone that has done business with them, has had an issue, and resolved it. That ecosystem, that ability to manage problems for us is very, very important, because it's scrap metal, things happen. I'm not necessarily generating every single package. So something can go wrong. And, there's one type of customer that if they have 5 containers on the way, they have an issue with the first one, they won't pay the remaining 4 and let it sit at the container, sit at the port. That's always kind of a nightmare situation for a trader, for an exporter. And that's something that typically, if other people have experienced, they're willing to share. So that's one of the things I try to find out. But of course, like Arihan said, start slow, start with one deal, start with, a couple containers, build that experience. But the trade references, the credit checks, those are huge. Being able to see their facility, seeing how much capital they deploy, that's huge. Another part of that of visiting, which is a slight additional element, is just seeing, again, how are they processing the material? If I'm shipping them Zorba, are they completely just going through it by hand? Are they running it through a trommel and sizing it before going through it? What kind of water tables do they have? That will give you insight into, again, how problems might be dealt, right? If there's a recovery difference, there might be a reason why there's a recovery difference. Sticking with your payment terms are important. There's always constant pressure to try to move towards a more and more loose payment terms. Which, again, if you're able to get the credit references, if you're able to get insurance, you have that flexibility. That's a great benefit. But it's something, if you're unable to do it, be diligent with your payment terms. Sometimes chasing that last penny, that extra deal isn't worth it. And maybe just maintaining that relationship over a year or 2 years, however long it takes before you have that confidence, it's worth it.
On that topic with payment terms, it's quite interesting because there's a lot of opportunity in the market if you're willing to even give 30, 60-day terms to importers sometimes, right? So, and I wonder, I used to deal with that. We used to use some LCs back in the day to make that happen. But I know, and I've learned over time, that a lot of trading companies are actually providing that level of service, normally alongside of an insurance, policy as well. But do you guys provide these types of payment terms, or when you say keeping to your payment terms, like maybe where's the line that you guys draw, and how does that look?
Yeah, so Stillbro doesn't do that. It's something. It does open up opportunities and doors. So I know some companies do, and they're able to build a niche that Stillbro historically has not. And individually, we're okay with it as of today. The payment terms I'm referencing would be like deposits, right? Like we want a 20% deposit, for example, before we ship, or we want a fixed deposit, or we're not going to ship a certain number of containers on the water and have that exposure to a certain consumer. So we're pretty diligent about staying within our thresholds. Some of our banking relationships also require us to stick within those thresholds, which we're okay with. But to your point, if you are able to leverage Tradefox, able to leverage credit insurance, and being able to offer those payment terms, it does open up a lot of doors. And being able to be creative with it is great. Going back to kind of financial analysis and understanding your trades, at the end of the day, look at your return on invested capital, look at how that additional transit time impacts your payment cycle, and make sure it's worth it. But if it does, that's a great business.
Well, guys, this has been very, very informative, and I've got a few good questions here, and we have about 10 minutes or so. So let's start here with the most recent one that's popped up from Anna. She says here, I'd like to ask what the invitees consider that could help the industry to solve problematic situations. So despite KYC, despite visits and drinks at ISRI or BIR or REMA, all buyers for sure have had their share of bad experiences with some suppliers, from empty container at arrival or load of stones, et cetera. Sure, then this is a big problem in our industry because honestly, these, like you said, these problems they're not that frequent. You're going to lose, a lot or have a really bad deal or some type of fraud. But there's enough of that in the market that buyers have experienced these problems, and it creates a lot of fear and a lot of concern and a lot of hesitation. So she says further, international trials are absurdly long, expensive, and really something is recovered. What could we do as a sector to address that, basically?
Sure. So since I was referenced, I'll kick it off.
Yeah, sure.
Before I address what can be done as a sector, talking individually, making sure your company has a vetting process and a due diligence process is critical. So both our suppliers and our consumers that we deal with, we make sure we get all the registration documents, W-9, we're able to look them up, understand who they are, know who's on the management team, who their banking relationships are. Half the time, do we do much with it? No, but knowing that we have it, that they're able to supply it, at the very least, means that they are an established, proper company. But yes, I mean, obviously, if you call those banking relationships and you vet them even further, all the better. Historically, that has been a key part in just preventing fraud, we had a situation a couple of years ago where someone was representing themselves as part of a company. They sold us material. Somehow, it got paid, container got loaded. sorry, no container got loaded and we found out he was never part of the company. So I would imagine, unless if you do the vetting process, if you know the management of the company, you're able to have those calls with the suppliers. It helps prevent it. But I think what you're going towards is there are trade associations in the industry, and they know that these situations have happened and there are bad players. Could they be doing something? I can't answer that. I know Rima, former ISRI, does have an arbitration panel that helps settle disputes. I've never had any experience with it. Arihant, I don't know if the BIR has something similar, if you've experienced it. For the most part, it's making sure you also have peers, even if they're competitors, friends that you talk to and you share this information with. I think, especially with Tradefox, I mean, that's one of the key things that they do. If someone does something bad, that information now is getting distributed. So the combination of talking to the peers, using Tradefox, and kind of making sure information gets disseminated, which more and more so that's happening pretty quickly. I think that can be done, but if the trade associations can do more, that's a great question. I don't know.
I mean, just to jump in before, or you can add something after this. This is one thing that's I've seen for many years. I mean, we're in multiple trade associations as well, and there are so many. There's literally every country has one, right? So and they're the bigger ones and regional ones, etc. But oftentimes you're doing business with somebody that's not in a trade association, or they're not in the one that you're in, or whatever. So anyway, that's one of the ideas behind, well, kind of a need that we see that we're trying to fill. Ultimately, you mentioned that we basically, we distribute that information very rapidly. When some company is reported for some type of unfair trading practice, we have a vetting process. We check the documents, and if we see that it's fair and correct, and we have enough evidence, we'll also flag that company, for example. So it's a big problem, and one trade association can't fit everybody in it, every company. So yeah, that's one issue we're seeing as well. Do you have anything to add, Ariant, on that?
Yeah, I think KYC everyone does, which Abhijay has touched upon. It's sort of the way the banks do the KYC, you do your KYC. But I still strongly believe that if you're in the industry, when you have competition, there probably could be 10 competitors. But if you're in trouble, this is the beauty of the recycling industry. Your competitors will have your back. I do not see this in any other industry, right? Competitors will help you out. They'll give you the information that you need if you are in trouble, right? And third of all, you have to judge your sixth sense. I mean, 9 out of times, 10 times you could be right. One time you could get it horribly wrong. But I am a firm believer in that is probably your karma. You would have had to get it. I mean, I could be very vague in saying this, but even if you do all your due diligence, vet your partners, do your KYC, you still will end up having one trouble that you could probably never have gotten out of. So my personal experience in 15 years is you judge your sixth sense, you do your homework, vet your partners, speak to trade association, talk to your competitors. But if it was supposed to be, it was supposed to be. Just take it up and move on.
Okay. Yeah. Sometimes it's as we're dealing with people that
you can't do anything. It's just God's way of saying it. It's supposed to happen. I probably could sound very vague and philosophical.
Yeah,
that's the way it is.
We've struggled with that, to really, we get so many reports of losses, and with that we've actually gotten to a capacity level. We can't take any cases currently, actually, but and it's difficult to help people recover their money once it's gone. We're looking at more. We've been more like setting up networks within certain countries with legal teams so that we can, basically just send deals to and say, take it to the courts, because that's sometimes just helping companies find out, which attorney can I trust in this area is already something that, we can sometimes help with, and just hand it over and let them take it to the attorney in the U.S. the state of, Georgia or whatever it is, right? But yeah, I hear you, Ariant. Very, very, very.
I just have a very small example. We had this in 2012. One of the biggest recyclers in UK. We send our inspector on. There's a CCTV camera who's doing. My inspector is taking photo. He takes a break. In that particular, there's 25% dust, right? Wow. And he loads 8 to 10 containers.
Yep.
What do, right? You've got credit insurance. You fight a legal case. I spent $150,000 on the legal case. We couldn't turn it up. They just switched off the CCTV and they said we don't have it.
Yeah.
It was supposed to happen. It happened.
Yeah, it does. Yeah.
The one thing I throw in there, though, just not to cut you off, Chris. One thing I think about a lot is you want everything to be easier, but you don't want it to be too easy, right? To a certain extent, where there's a reason why traders exist. There's a reason why not every Joe Schmo off the street comes into the business. It's because there is an inherent risk, and you have to get really good at the risk. You have to develop those playbooks. You have to develop the experience. If it gets too easy, everyone will start doing it. Competition increases, and the people that are good and the people that are bad at this business become the same. And you want to have that differentiation. So maybe I just say that to make myself feel better, but it is something I tell myself.
It's a very good point, I would say. There's a couple other questions here I think are really good, and we might go over just a little bit, but I love this, the question actually from Sanjay here. It was in my mind as well. I want to ask you this question, Ariane. I know he popped this in right when you were speaking about the
Sanjay Bacha.
Right, and you're selling only with LC, and you had a short shipping time. And how the heck are you able to get your LCs cashed? I meant to ask it. Sanjay, ask it. Please give us your response.
Sanjay ji, hi, wherever you are. He knows me very well. So what we do is on these shorter transits, we have got something called a standby LC, which any European or a standard bank would give you. Your customer's bank and my bank will open a standby LC. It sort of works as a guarantee, right? And it covers me, let's say, up to 500 million, or let's say about 100 million, depending on customer to customer, right? I can then do that shipment within 5 days, right? Send the documents to him over. Unless he pays for my documents, he can't clear it, right? So sometimes we believe in telex release instead of having the documents coming, let's say, from all the way from Singapore to Antwerp, and then from Antwerp, I send it to, let's say, Bangladesh or Chennai, for example. Instead of doing that, that standby LC enables us to maybe do a direct telex release from Singapore to China. That way we save transit time. And on these shorter transit route, what we try and do is we work on a 21 days free detention and demurrage instead of the standard 14 days. Just in case if it does not reach within 5 days, you've got enough cushion for the customer to clear the cargo and still return it empty within 21 days. So generally, when I work from Far East into the Indian subcontinent, I try and make sure that we have 21 days in practice and we have a standby LC and we try and do a telex release. I hope that answers Sanjay ji's question.
Very good. Very good. And last question here. What are the best sources for import data? And coming back to the data. So where are you guys getting your import data?
Okay. Look, there are lots of channels to get it. I mean, you can get it from paying in the customs house. You can get the data. You can use reliable connections officially, unofficially to get the data from whichever country you want to. Generally speaking, it's available, widely available, if you have the right resources. And of course, like yourselves, you are also data miners. So I probably you're the best ones to answer this question rather than putting me on the spot.
Yeah, it's good to hear your response, Ariane. And yeah, I can also say the same.
Yeah.
We obtain data from customs agencies, and some of them, India, Pakistan, we actually through a reseller because they're not available directly anymore. So we get those through resellers. There are a lot of companies that sell data, and it's quite a challenge for us. And Will Cavendish, our CTO, is actually on the call as well. He struggles with this data all the time because all the sources have different information, and sometimes the numbers are even like we look at the raw data, look at the total value of a particular commodity coming out of a country or an area or a port, and it'll be off by 50% from one source to the other, and we're like, there's duplicates in there, and there's missing data. So, but it is for the practical purpose of trying to understand who companies are dealing with to get that kind of market intel. This is, of course, what we do and why we do it. We put it out, for free, but we need to understand which companies are trading with each other. But it's available all around from so many different sources. You can pay a lot of money for it. You can pay a lot less money for it.
Yeah.
But you have to pay for it something. And we spend quite a lot ourselves on it. Abhijay, do you have a comment here from your side?
Yeah, I couldn't tell you specifically what company we use. But there are a lot of companies, and we have been contacted by a lot of companies that offer trade data and import data. Obviously, Chris, their platform has a lot of data as well.
Yeah.
So it's out there. If you start searching, I don't think it's that hard to find.
We have about I haven't checked the numbers in a while, but more, I think it's about 3.5 million trades are in our system. And our main sources are US Customs, in India and Pakistan data, but we've just brought on a new supplier, and we've not brought it fully online yet, but we're able to see almost, I think it's like 60 or 70% of global trade now with the new data sources coming on in 2025. So we're looking at licensing and how we're going to use that. We're really leaning more towards taking the information and analyzing it and producing the stats and the information about it. Because at the end of the day, a list of thousands of trades, it's something that some of our customers don't really prefer us to share. Fair enough, because it is sensitive information. It's not our core business. But we need that data in order to be able to know which companies are buying and selling from each other so we can create accurate scoring. So we're starting to move towards the idea of creating more statistical analysis on data, but a very, very, kind of detailed stats with some, of course, some trading partners as well, but more about volumes and movements, et cetera. So. Okay, well, great. I love the questions, gentlemen. I really appreciate you guys taking the time to be with me and be on this call with all of us today. It's really important in our business that we share our stories and help each other out. That's how we all win together. Ariane, as you said, even the competitors are going to help you out when you're in a bad spot. And of course, this is the way we help each other out, just sharing our secrets and tips and the ways that we've managed to achieve some success. So thank you very much for joining today.
Thank you for having me, Chris. Pleasure. Thank you.
Yeah, this was great. Really appreciate it, Chris.
Thanks, Chris. Stay in touch. Cheers. Thanks. Bye.
Okay.